Hello, ladies and gentlemen. This is Greg Michaelowski. I'm with FXDD, and I'm doing a Forex commentary for FXStreet.com. I'm going to take a look at the dollar versus Canada and how it reached its target level, its support, and found a nice little bounce off of that support level. We're going to start off by taking a look at the daily chart. This is where the support level was found. If you look at the recent range, if you take the low here in April and connect it to the high here and put a Fibonacci retracement on it, 50% came in at 103.91. That was one level of support. The market came down, tested that yesterday. Today the market continued its move back to the downside, and we reach this blue line. What is this blue line? This blue line represents the 100-day moving average. It's one of those the 100 bar of any chart. I find is a level that the market pays attention to. It's if you turn on CNBC, if you turn on Bloomberg, what do they talk about? If someone talks about technicals, most of them talk about fundamentals. But if they talk about technicals, they're gonna mention the 100 bar moving average, and everyone will be an expert on that. So if everyone's an expert on the 100 bar moving average, I think it has a significance because it's what the people look at. It's a simple moving average that people tend to look at. So the market came down to the 100-day moving average, and those unsuspected people who don't look at the 100-day moving average were surprised when the market found a quick a buyer at the level, and market started to move up. You can see that closely in the 5-minute chart. I'm going to zoom in here, take a look at the 5-minute chart, and you can see how the market went down to that 100-bar moving average. And I'm going to move this down here and quickly rebounded. How do I know it quickly rebounded? Look at these tails in the charts. The market came down and closed the bar at a much higher level, much higher than that low. And the next bar came down again and found earlier buyers against that level and closed again higher. And then it started to move to the upside. Now, what can we tell about the technicals looking at this 5-minute chart? And what I'm going to zoom out, and what we know here is that we hit a nice support level off the 100-day moving average. Now we put our Fibonacci from the most recent high to the low. The most recent high actually came in at yesterday's high, and that targets a 38.2% corrective move up to the 104.23. Will we get there? We don't know. There are other levels along the way which may prove to be a bother for that move to the upside. But what I can say from this chart is that we are seeing support against the 200-bar moving average at the 103.73. The blue is our 100. The green is our 200. When we broke above the blue, we went up, tested the green, came down, and market wasn't ready, market's ready, and we go up. Where do we go? To go to the high for the day, test that high at the 96 level, and found some resistance there. Where do we come back down to? Come back to the 200. So right now, I consider this market to be in a state of transition. It's in between the 200 bar moving average, this green line, and this 103.96 level, the highs for the day, trading right in between those two levels, and the market has to make up its mind at some point or another. Does it want to remain above this this moving average line and continue through the 103.96, in which case we could see the market head up toward the 104.23 level, that 38.2% retracement, or do we want to do something different and use this level as a resistance level here, and eventually get through the green line, move through the 200, and start to our next support level at the 103.50 level, which has 1, 2, 3 different lows at that level, and perhaps if we break through that, go through there. Trading is a series of steps, folks. It's a series of steps that going from one target to the next target, and right now, and what good traders do is they look for support against key levels, what I call borderline levels, against things like the 200-bar moving average, 100-bar moving average, against old highs, against old lows. And if the market can get to those levels, get through those levels, then they just move to the next target. They go from target to target to target. So that's my look at the dollar versus Canada from a technical basis. Once again, we are above support here at the 103.73 level. We got to get through 96. Get through 96, you should see 104.23. Look for buyers against this level. Look for additional buyers above that to the 23. If the market breaks below the 200 bar, look for support here at 65. Look for the next target to be 50. Look for the next target after that, 103.32, that key 100-day moving average on the daily chart. This is Greg Michalowski with a look at the dollar versus Canada for FX Street.